A weakening outlook for global demand has been putting pressure on oil this week. We are looking, of course, at potential inventory builds around the world if consumption falls off a cliff. Joining us now, Robert Yawger, Director of the Energy Division at Mizuho Securities. Robert, thanks very much for coming on the show.
Thank you, Andrew.
Give us your take broadly on oil consumption globally. We'll get into the U.S. energy inventories in a second. Is there any evidence emerging that the world is using less fuel at the moment?
Definitely, I think. The problem here is demand destruction, not supply, the way that OPEC puts it out, in my opinion. Everybody's worried about a global recessionary situation, and that's going to scale back demand, Andrew. We're also in turnaround season right now where people are neither driving big miles or heating their houses yet. So there's not demand for product either. We're running less crude oil through the refinery at this time of year also. And we'll continue to slide for the next 4 or 5 weeks also.
You got this big build in the United States, crude inventories up almost 10 million barrels. What caused that?
I'm looking at the small numbers, and it's exports. Exports slid almost 1.5 million barrels in 1 week per day. So right there's your number right there. It's all in the exports. We were approaching the all-time record as of last week's number of 4.5 million barrels a day in last week's report. We're at like 2.8 million in this report. We fell really hard. Mm-hmm. And it's hard to believe, too, because the differential between U.S. crude oil and international benchmark has been hanging out at around $7.
That's wide.
Down to international. So a lot of refiners like in Amsterdam, Rotterdam, Antwerp area, they'll make the trip to buy those U.S. barrels. They'll make $1 or $2 on the ARB. After transportation and storage. So they've walked away from that this week, which is it's a bit of a surprise to me.
Could that point to weakness in demand in Europe?
Yes, absolutely. That's easily be the case. Not only that, but you got the French strike also. The French refiners strike. So yep. They're not running maximum volumes through the refinery right now. It was kind of not a big story until this week, but it's been a situation for a while here now.
Bob, apparently the White House has been urging U.S. oil companies to think about restraining their fuel exports, and they have not bitten on that one because it does seem odd. We essentially have a global oil market, and it would seem like protectionist even retaining fuel in America to keep fuel prices down.
Yeah, I don't think that's going to work, and it's the worst thing they could do is put limits on exports, and so we don't participate in that global free flow of commodity. What would happen then? We've already lost 5 refineries in the last 2-3 years here in the United States. A lot of them on the East Coast, not too far away from where I live. And we can only blend 16 million barrels a day now. We were at an all-time record 17 and change in 2019. We will never be there again. We don't build new refineries, and we don't really expand existing ones for size. 17 million was the all-time high in 2019, and that will probably be the all-time high forever. And for a refiner to stay in the business and move product for size, they need to participate in that international market. That incentivizes them to participate for size and to continue to move those crude oil barrels through the refinery.
So they're not going. Do you think they might even throw President Biden a bone and say, "Oh, we'll look at restricting exports"?
You would think that the political situation being what it is, that they would, but they have not. We were at something ridiculous like 1.7 million barrels of distillate. That's heating oil and diesel going out overseas 2 weeks ago. In that report, that's amongst the highest numbers of all time. Right in the midst of a point where heating oil prices are at arguably one of their highest of all time. Right now, the heating oil premium to crude oil yesterday was an all-time high. Wow. You buy a barrel of crude oil through the refinery. You buy that barrel of crude oil for $88 yesterday. It came out the other end of the refinery. The refiner was getting $82 for a barrel of distillate. That's the all-time record. So, this is very close to becoming a political situation. I'm still running in tank top and shorts, and I haven't even got my winter jacket out yet. We're already kind of numbers.
Bob, I would like to talk about wearing shorts and how far into the winter, because I do have strong views as well. I'm a diehard too. I wanted to ask you though, global oil prices, is it a bearish scenario right now? Do you see lower prices for Brent and WTI?
I tend to think we do for at least a couple more weeks here. Eventually, it's a demand situation. Demand will probably put pressure on the barrel here between now and Thanksgiving in the United States, I would say, so the end of November. However, on December 5th, the European sanctions on all Russian crude oil kick in. That's going to be put a bid in the market. And then shortly after that, the administration is going to sell their last barrels of SPR crude oil. That's gone also. That program actually worked very good, way better than I think anybody suspected. And that's going to be gone also. At the same time, we have this heating oil situation. If heating oil continues to rip higher, the refiner is going to have to use a lot of crude oil to make a lot of heating oil to keep everybody warm in the United States and probably in Europe too, to keep everybody happy.